Hey everyone, it's Steven. In this video, we're diving deep into 15 hot investment markets that you need to keep your eye on in 2020. From tech to pharmaceuticals and even some surprising industries making a comeback, we're covering it all. So grab your notebooks and let's get started. First up, let's talk about Bitcoin. Now, I know what you might be thinking. Bitcoin? Hasn't that been around forever? Well, yes, but here's the thing. Bitcoin is gaining serious momentum, and 2020 could be a huge year for it. We're seeing more businesses accepting Bitcoin as payment, and institutional investors are taking notice. This increased adoption is leading to amplified liquidity, which is music to any investor's ears. The potential for gains is massive, but remember, with high reward comes high risk. Do your research, understand the volatility, and invest responsibly. Next up, we're heading into the world of pharmaceuticals. The race to develop and distribute a vaccine has put pharmaceutical companies in the spotlight, and their stock prices have been on a roller coaster ride. We've seen massive surges followed by sudden dips, creating a tantalizing opportunity for savvy investors. The key here is to identify companies with promising vaccine candidates and strong financials. Keep a close eye on clinical trial results and regulatory approvals, as these will be major catalysts for stock movement. All right, let's talk about the future, and for me, the future is green. The renewable energy sector is experiencing explosive growth as the world shifts away from fossil fuels. Companies like Brookfield Renewable Partners and First Solar have been crushing it in the market, and this trend is expected to continue. If you're looking for a long-term investment with massive growth potential, renewable energy is a sector to consider. Just remember to diversify your portfolio and invest in a mix of companies with different technologies and geographic focuses. Now let's talk about a sector intrinsically linked to renewable energy storage. As we rely more on solar and wind power, we need efficient ways to store that energy for when the sun isn't shining or the wind isn't blowing. Tesla, with its Powerwall and Megapack technologies, is leading the charge, but there are plenty of other players in the game. This is a rapidly evolving market with huge potential for disruption, so it's an exciting one to watch for investors who are comfortable with a bit of risk. Now let's move on to a sector that's near and dear to all of our hearts: social networking and e-commerce. Facebook, Amazon, Shopify. These companies have seen their valuations skyrocket in recent years, and they continue to be attractive investments. However, with great power comes great responsibility, and these tech giants are facing increasing scrutiny over data privacy, antitrust concerns, and their impact on society. It's important to stay informed about these issues and how they might affect the long-term prospects of these companies. All right, let's shift gears and talk about something a little more tangible: precious metals. Gold and silver, the classic safe haven assets, have always been a popular choice for investors during times of economic uncertainty. When the stock market gets shaky, investors tend to flock to precious metals as a way to preserve their capital. Having some exposure to precious metals in your portfolio can be a smart way to hedge against risk and potentially profit from market downturns. Now, while gold and silver might get all the attention, there are other precious metals out there that deserve a spot on your radar. Platinum and palladium, often overshadowed by their more famous counterparts, are crucial components in various industries. Platinum is widely used in catalytic converters for vehicles, while palladium is a key ingredient in electronics and jewelry. As demand for these metals continues to grow, their prices are expected to rise, making them intriguing investment opportunities. However, it's important to note that the prices of platinum and palladium can go volatile, as they are heavily influenced by industrial demand and supply. Now let's talk about an industry that's been hit hard by the pandemic but is showing signs of recovery: airlines. With travel restrictions easing and demand for air travel slowly picking up, airlines are starting to see a glimmer of hope. While it's going to take some time for the industry to fully recover to pre-pandemic levels, there could be some lucrative investment opportunities for those who are willing to be patient. Keep an eye on airlines with strong balance sheets, efficient operations, and a focus on adapting to the changing travel landscape. However, It's important to remember that the airline industry is notoriously cyclical and vulnerable to external shocks, such as economic downturns and geopolitical events. Speaking of the travel industry, let's move on to hotels. Similar to airlines, hotels have been significantly impacted by the pandemic, but they are also showing signs of a rebound. As vaccination rates increase and people feel more comfortable traveling again, hotels are seeing an uptick in bookings, particularly in leisure destinations. This is good news for hotel chains like Marriott International and Hilton Worldwide, which have been hit hard by the decline in business travel. However, the hotel industry is still facing challenges, such as labor shortages and rising operating costs. All right, let's shift gears and talk about an industry that's always evolving: the automotive industry. From traditional car manufacturers like Ford and Volkswagen to electric vehicle pioneers like Tesla, the automotive landscape is undergoing a massive transformation. This shift towards electric and autonomous vehicles is creating both challenges and opportunities for investors. Legacy car makers are pouring billions of dollars into developing electric vehicles, while Tesla continues to dominate the EV market. The key here is to identify companies that are at the forefront of this technological revolution and have a solid track record of innovation. Now, let's talk about an industry that's been generating a lot of buzz lately: the legal marijuana market. With more countries and states legalizing cannabis for medical and recreational use, this industry is poised for explosive growth. Companies like Aurora Cannabis and Canopy Growth have become household names in the cannabis space, but the market is still relatively young and volatile. Investing in marijuana stocks can be risky, but it also offers the potential for huge returns. However, it's important to be aware of the regulatory hurdles and political uncertainties that still surround the cannabis industry. Now let's talk about a sector that's been on fire lately: cloud-based services. With more businesses moving their operations online, the demand for cloud computing, storage, and software has exploded. Companies like Microsoft, with its Azure cloud platform, and Adobe, which has successfully transitioned to a software-as-a-service (SaaS) model, are reaping the benefits of this trend. Investing in cloud-based services can be a smart move, as this sector is expected to continue growing rapidly in the coming years. All right, let's talk about a sector that's turning the traditional financial industry on its head: financial technology, or fintech for short. From mobile payment platforms like Square and PayPal to online lenders and robo-advisors, fintech companies are using technology to make financial services more accessible, affordable, and efficient. This sector is growing at a breakneck pace, and there are plenty of investment opportunities for those who are willing to embrace disruption. However, it's important to be aware of the regulatory challenges and competitive pressures that fintech companies face. Now let's take a step back from all the high-growth, high-risk sectors and talk about something a little more stable, slow-growth stocks. These are companies that might not be growing as rapidly as some of the other companies we've discussed, but they tend to be more resilient during economic downturns and offer a steady stream of dividends. Slow and steady wins the race, right? Investing in slow-growth stocks can provide stability and diversification to your portfolio, especially if you're risk-averse. However, it's important to remember that even slow-growth stocks can be affected by market fluctuations, and it's crucial to choose companies with strong fundamentals and a history of paying consistent dividends. So there you have it, folks. Those are 15 hot investment markets to watch in 2020. From the digital gold rush of Bitcoin to the green revolution in renewable energy, from the disruption in fintech to the stability of slow-growth stocks, there are plenty of opportunities for investors of all stripes. Remember, the key to successful investing is to do your research, understand your risk tolerance, and diversify your portfolio. Now, I want to hear from you. Which of these markets are you most excited about? Share your thoughts in the comments below. And don't forget to hit that like button and subscribe to the channel for more videos on investing, personal finance, and building wealth. So that's it for this video, guys. Hopefully, this gave you some ideas on where to park your money and get some amazing returns. Remember, always do your own research and understand the risks before investing. The key is to stay informed, be strategic, and make smart decisions. If you enjoyed this video, Don't forget to smash that like button and subscribe to the channel for more awesome content. All right, I'll see you in the next one.